It's Monday the 13th, I'm FX Blue and this is CurrencyTransfer.com's market update. The headlines today are that Trump is using trade as a weapon once more, Brexit fears drive sterling lower, and the euro falls over Turkish exposures. So Trump's most effective weapon has been trade tariffs. He's provoked China based on his belief that China needs US trade more than the US needs China. And there's a growing dispute with Turkey over the trial of an American pastor charged with terrorism offensive. Trump has doubled the tariffs placed originally back in March on Turkish metals. These tariffs threaten to cripple the Turkish economy, and the Turkish lira has dropped 40% in over a month. The dollar index has necessarily rallied. It touched a 13-month high of 96.45 on Friday, as emerging market currencies fell and the euro dropped. More on the euro later. Sterling is back on the back foot once again. Since Parliament broke for summer, sterling's lost about 3.5% against the dollar, largely driven by, dollar strength and growing fears of a no-deal Brexit. Cable touched a low of 127.25 on Friday. Parliament returns on the 4th of September, and Theresa May is largely expected to try and steady the ship, revising and revisiting her efforts to find a Brexit deal. The lack of follow-up from Fox's claimed 60-40 chance of hard Brexit has seen his comments passed into the propaganda bin. Lots of discussion is still to come between London and Brussels, no doubt, and no doubt plenty more threats of a no-deal outcome expected from Brussels and London equally. But opinion seems to be that both sides are more likely to move towards an extension of the March 29 deadline than see a no-deal goodbye on that date. The euro dollar has dropped to a new year low of 113.85 on Friday. Euro dollar has fallen more than 8.5% so far this year. Draghi is happy with a weaker currency and has stated that openly, but the pace of this fall may need to revisit monetary policy if it accelerates much further. The latest drop, of course, is due to Turkey and the ongoing crisis there. The concerns are that the Eurozone financial institutions, particularly banks in Spain, Italy and France, have too much exposure to the Turkish crisis. The contagion risk is that if the crisis spreads, then Eurozone debt may be abandoned in favour of US debt in the short term at least. That will obviously further weaken the euro in the short term. Any questions? Please pop them in the comments below. I'll see you tomorrow.